Should Elon Musk be successful in cutting down on accidents by half as compared to human drivers, shouldn't auto insurance prices decrease as a result of the lower underwriting risk? This might have a negative effect on Geico's earnings, float, and possibly even margins. Let's take an extreme example. What if, for some strange reason, there were only 3 accidents in the United States the following year? Cost will go down with everything that lowers accidents, but it's been more difficult than expected to achieve these reductions. Should it occur, the data will show it and costs will decrease. Greetings to all of you again. Today, we're exploring the recent revolutionary remarks made by none other than the financial industry titan Warren Buffett. His startling comments regarding Tesla have stunned everyone and could portend significant shifts for the company's future. Let's explore the surprisingly exciting field of insurance. You read correctly. Insurance can be an exciting ride, particularly when industry titans like Elon Musk and Warren Buffett are in the driver's seat, talking about Tesla's autonomous technology and how it will affect society as a whole. Imagine this. The Oracle of Omaha and investment maestro Warren Buffett recently wondered what would happen to auto insurance in a world where Tesla's autonomous vehicles took over. He believes that while Tesla's driverless cars cut accidents by an astounding 50%, it would be a major blow to insurance firms, but potentially excellent for public safety. Less crashes translate into a reduced need for insurance, which causes the insurance industry's volume to decline. In his usual wise guy way, Buffett admits that fewer accidents hurt insurance companies, but are ultimately good for society. Elon Musk then abruptly joins the discussion by tweeting that Buffett might want to purchase some Tesla stock in order to hedge his chances. Classic Elon, converting a difficult argument into a stock recommendation. But let's not forget the past disasters when industry titans like GM and Uber attempted to go into the insurance business only to suffer financial losses as a result of mispricing risks, so think twice before calling your broker. Turning to Tesla, they gather data like squirrels storing nuts for the winter, in addition to producing automobiles. They monitor everything, even your speed and the timing of your brakes in response to that same squirrel darting across the road. Insurance always appears simpler than it actually is, which is why it's so alluring. You get the money up front and only discover whether you made a mistake later. A 50% reduction in accidents benefits society, but hurts the volume of business for insurance firms. But in the end, our goal should be to benefit society. With all this information, Tesla hopes to create a future in which driving a car equipped with their self-driving technology not only keeps you safe from squirrels, but also lowers your insurance costs. Though perhaps not so much for traditional insurance executives, who could feel like long-tailed cats in a room full of rocking chairs, this could imply less costs and a more comfortable journey for everyone. What then lies ahead? A possible upheaval in the insurance sector, wherein traditional insurers may face significant adjustments as a result of fewer accidents and smarter automobiles. As Buffett notes, the process of adjusting to this future won't happen quickly. Tesla will need some time to accumulate enough miles and data in order to fully develop their technology. As you can see and most likely already know, Tesla designs its cars to reduce the likelihood of collisions. Once autonomy takes over as the primary mode of navigating, the probability of being the cause of an accident will significantly diminish. For Tesla, this is a recent development. The miles driven weren't rising at the intended rate prior to version 12, but since version 12 and the free trial, there has been a noticeable increase. Tesla's improved car performance and lower chance of collisions are leading us to a safer future. It's possible that Warren Buffett is considering how these developments might affect his own business while he watches from the sidelines. After all, the market for traditional auto insurance declines along with the number of incidents. Buffett should think about hedging his bets in light of these technological disruptions. It's important to keep in mind that even while Tesla's technology may result in fewer accidents, the cost of repairs for each one has increased dramatically. Therefore, the overall expenses may not have decreased as much as Tesla would have us believe, even if the frequency of incidents does. There are bumps in the path leading to the autonomous utopia. Tesla's technology lowers the number of accidents, but the cost of fixing the few that do happen is higher. Why? because these expensive, high-tech cars are loaded with expensive, sophisticated equipment. Thus, even though there aren't as many fender benders as there once were, their prices have increased. The financial savings from fewer accidents that we hope to observe may be countered by this. This is where things become very interesting. Tesla may be preparing to directly challenge the insurance sector in addition to continuing to produce automobiles. In a perfect world, your insurance would be provided by your car's manufacturer. By offloading some of the insurance burden onto the equipment provider, Tesla's entry into the insurance market may do more than just cover repairs. It may completely transform the relationship between car manufacturers and their customers. Indeed, Tesla is altering the rules. It's evident from this changing environment that Tesla is blazing a trail that may eventually lead to a new paradigm for automotive economics. Conventional insurers may have to reassess their plans or run the risk of being swept away by the electric vehicle revolution. Let's now take a closer look at the workings of Tesla's cars, which are not only aesthetically pleasing, but also economically friendly. Tesla's self-driving systems and componentry now have a more modular design. This implies that we have tidy, interchangeable modules under the hood rather than a tangled mess. It seems that fixing these sophisticated components isn't as expensive as we initially believed. So, you could be pleasantly pleased if you were concerned that fixing a Tesla would be extremely expensive. Let's run some numbers now. The true savings come from lowering the frequency at which repairs are required in the first place, even though the cost of individual fixes may not soar as initially anticipated. With fewer collisions caused by more intelligent driving technology, the overall cost of repairs may eventually go down. This is a victory lap for sustainability and safety, not simply for your pocketbook. It took more than 3 years to reach 1 billion FSD full self-driving miles. Less than 3 months will pass before reaching 2 billion miles. We'll see if the question of how many billions of miles are being driven at this time continues to soar. The rate of compute power growth is exponential, and we are approaching escape velocity. With supervised FSD as it is, Tesla's technology is now averting 7 crashes daily, which is less than the predicted 11 expected human crashes per day, offset by 4 crashes where FSD was active. Sawyer claims that at 15 million miles per day, this is equivalent to saving 1 life every week. More precisely, 1.35 lives. This analysis is intriguing, and I hope it's accurate. Employing just beta testers and supervised FSD, 1 person's life may be spared each week. In light of safety, let's discuss benchmarks. Not only is Tesla's full self-driving program saving lives, but it is also clocking up miles. With over 1.5 billion miles driven and heading toward 2 billion, the FSD technology from Tesla is averting almost 7 collisions every day. You read correctly. Artificial intelligence prevents 7 possible accidents every day. The worst part is that statistical research indicates that this marvel of contemporary technology may be saving 1 life per week. While you're enjoying your morning coffee, just let that sink in. Tesla's FSD might be saving the day somewhere. However, the Tesla adventure is far from over. Interesting discoveries with ups and downs occur every day, adding to the intrigue. For this reason, Tesla keeps drawing in more and more investors. But you know who else is as enthusiastic about Tesla as I am. Sponsor for today is Seeking Alpha. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. The greatest online source for pro-Tesla news is Seeking Alpha, so avoid the conventional media's negativity toward the car. Our channel might receive a commission if you click on the affiliate links in the description and make a purchase. I appreciate your help. Ion strategy and optimizing the cost structure are key steps on the